Good morning, everybody. We have a mixed trade in the grain markets here early on Monday morning. It is 6:30 a.m. Central Time. March corn futures up 4 1/4 at 5.52 3/4. March soybeans are down half a cent at 13.66 1/4. March Chicago wheat is up 5 1/4 at 6.46 1/2. March Kansas City wheat is up 4 1/4 at 6.29 1/2. March spring wheat up 3 cents at 6.29. We have a USDA report tomorrow. This is the monthly crop production and WASDE report. This will be your big news item or data item this week. Traders expect generally a friendly report versus last month, and just about across the board here. And I'm going to put the estimates on my screen here. So for U.S. corn, we're expecting a lighter carryout number for this current marketing year, a lighter carryout projection. 1.392 billion is the average trade guess. We were 1.552 last month. So I'd assume that the trade expects a larger export number in particular. We've seen some really impressive sales here as of late. I would imagine that the big change comes on the demand side, but USDA doesn't have to make these changes. They could wait another month and see how things play out in terms of shipments or whatever. Soybeans, similar deal. We're looking for a smaller U.S. carryout number. 123 is the expectation versus 140 last month. In wheat, 834 is the expectation versus 836. I'm not going to go through all of the world stuff, but we're looking for lighter world carryout numbers across the board, and we're also looking for lighter South American production numbers across the board. Brazil corn, Brazil soybeans, Argentina corn, Argentina soybeans, lighter numbers expected. Not by a lot, but lighter numbers. So you are very much expecting, or the trade is very much expecting, a friendly report from USDA tomorrow. Now, the thing with these reports, of course, and I say this every month, the issue is not necessarily whether it's going to be bullish or bearish. The issue is what has been priced into the market and what hasn't. I would imagine, given those estimates that everybody is aware of, some of the friendliness certainly has been priced into the market at this point. China did not meet the phase one trade deal commitment in 2020. USDA reported that China bought $28.75 billion of U.S. ag goods last year. That's a number that was short of the commitment, which was $36.5 billion. So, despite the miss, China almost hit their previous record, which was $29 billion from 2013. Now, the implication here, I don't really know if there is an implication. In regard to the trade deal or in regard to the future of purchases. We have a new president. We have a new power structure in Washington. I'm not sure if there's any implication here. We haven't really heard much about this from the Biden administration. So I don't know how this will play out. I don't think that this, at the end of the day, is a huge deal. And I think that most people in agriculture are probably generally happy with what happened. I know a lot of those purchases came a little too late for some of you. It would have been a lot better if this stuff came early in 2020, obviously, but still very strong nonetheless. Rains could slow soybean harvest in Brazil. Heavy rains can disrupt field work. They can also disrupt the country's transportation system, which is very reliant on trucking. I don't see any major issues in the forecast, really. I mean, rains during harvest are very normal. Heavy rains during harvest are normal. Forecasts don't suggest anything out of the ordinary. I mean, normal to below normal rainfall for most of Brazil this week. The 7 to 14 day period could be a little bit wetter by comparison, but still pretty much normal in regard to rainfall. Traders, again, expect a record Brazilian soybean crop. USDA should confirm that idea tomorrow. Black Sea wheat prices have ticked lower ahead of the Russian export tax. So exporters right now in Russia and also in Ukraine are kind of hurrying to export wheat ahead of this tax, which goes into place on March 1st. Russian export prices were down like 3 to 5% last week. Ukraine prices were down about 3%, kind of tracking what was going on in Russia. Russia will begin this permanent formula-based export tax on March 1st, which is really going to hinder exports. I don't know if you're going to see much at all in terms of exports unless either they scrap the tax or prices fall, one of the two. African swine fever again making some headlines in China. Chinese hog futures rallied sharply to begin the week. There were some reports indicating that new outbreaks have been noted. There was an earnings report from a large pig breeder in China. This was a quote from one of the analysts at COFCO. The damage caused by the epidemic this winter was much more serious than last year. Chinese officials have not commented on this. Their most recent statement or stance was that China's hog herd would essentially be fully recovered later this year. And these reports are kind of conflicting. So that's something that could be, a negative deal for these grain markets. I know that corn and soybeans look like they're totally immune to any sort of downward pressure here, but that's a story you've got to keep an eye on. Energy price is very strong. Crude oil trades its best level in more than a year this morning. Spot month WTI crude futures topped at 57.68 per barrel. That's the best trade in more than a year. Heating oil futures also traded fresh one-year highs, peaking at $1.74 per gallon in the spot month contracts. RBOB unleaded also hit a one-year high, traded as high as $1.67 per gallon. We're back to pre-COVID prices in the energies for the most part, and a lot of this has to do with supply cuts. OPEC, the Saudis in particular, when OPEC makes these kind of cuts, the trade gets very weary of being short the market, and I just don't know that there's anybody that wants to be there right now. Looking at the CFTC report, funds still very heavily long the corn market, estimated to be net long 329,000 contracts of corn at Friday's close. The only time that funds were long more corn was in 2010, 2011. We never even got this big in 2012. Funds are heavily long the soybean market. I wouldn't call it extreme, though. 158,000 contracts was the estimate at Friday's close. That position had been well over 200, closer to 250 at one point in time. In wheat, we've got a modest net long in the SRW wheat market at about 9,000 contracts. Cattle market, we did see some cash trade pick up a little bit on Thursday and Friday. USDA confirmed some sales at 114.5 in the South. 113.5 was where most of the business was picked up the last week. Box beef market was just a little bit higher on Friday. In the outside markets this morning, we have a higher trade in the stock market to start off. The S&P's up 11. The Dow is up 130 points. The U.S. dollar is just a little bit higher. Precious metals are a little bit higher. Crude oil is up 58 cents in the March WTI at 57.34. Bonds are a little bit lower. Remember, if you guys need some more information from me, go to my website. It is www.standardgrain.com. Go to their website, click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, you can sign up for my subscription service. It includes my morning email, which goes out every weekday at 6:30 a.m. Central Time. You'll be made aware of any overnight headline that is pertinent to the day. All of my grain marketing recommendations, all sorts of interesting charts and information there, and all my grain marketing recommendations. So I'll let you know how I'm pricing corn, soybeans, and wheat, broken down by crop, year, by percentage every day. There's a text message service that goes along with that. Any sort of consulting that you need, if you have a question about a cash contract or something along those lines, you can give me a call. That's all included. Everybody have a wonderful day today. Have a wonderful week. I will talk to you same time tomorrow.